The use of candlesticks didn't just start now. It's dated way back into the 18th century in Japan. You see, a guy named Marubozu Candle lived in Japan in the 18th century, and he traded rice. And he also discovered something. He discovered that the price of rice was influenced not by fundamentals alone, but also by traders' behavior. And when he understood this, he eventually went on to study how traders behaved. I mean rice traders in this aspect. And when he discovered how rice traders behaved, he kind of formed what we call the candlesticks. Now, these candlesticks is a representation of collective actions of traders at a point in time, and he named these candles. My name is FX, and in today's video, we'll be telling you the types of candles, the story behind these candles, and how you can use these candles to start making better trading decisions. So if you're new to this channel, please subscribe. Just do that immediately. And if you're old and you haven't subscribed, please do that right now. Let's go into the video proper. Right now, candlesticks. Marubozu Candle, like I already said, traded rice, and he made candlesticks. Now, basically, there are four types of candlesticks. I know you must have seen several candles out there, but here is the truth. Basically, there are four candles you could study, and when you study this candle, it makes you understand the in-depth idea behind why these candles were formed and how it is many other candles you've seen out there were formed from these four. So let's go. The four candles are the Marubozu Candle, the Grave Doji, the Butterfly Doji, and the Tweezer Bottom. Right, these are the four candles, and they've got a story. Let's start with the Marubozu. You see, the Marubozu is a strong candle. It could be red or it could be green. Now, if it is red, it tells you that sellers are actively involved in the market today. And when it shows you green, it tells you that, buyers are actively in the market today. Now, what do? You either buy or you sell, depending on the information you've got about the color of the candle. It also tells you strength. Right, when you see a Marubozu, it tells you, aside from the fact that buyers are involved in the market, they are strongly willing and ready to buy. Right, and when you see a sell Marubozu, it tells you sellers are strongly active and willing to sell. Now, that is about Marubozu. The next candle is the Grave Doji. Right, the Grave Doji had a story that is very beautiful. Now, the Grave Doji tells you of a candle that was originally bullish, and at some point it got to a level and it was pushed down back by sellers. That's so tragic, man. Really, really tragic. However, it's something we love, because when you understand this, you trade better. Right, so the Grave Doji tells you of a bullish candle that was originally going up but then pushed down by the sellers. Now, the Butterfly Doji. The Butterfly Doji tells you a story unique, almost the same thing as the Grave Doji, but in the opposite way. You see, in the Butterfly Doji, this tells you that at some point in time, sellers were actively involved in the market, and they were pushing the market so chaotic, and at some point, buyers were like, we don't want to sell. We don't want to see this candle go down. And they stepped into the market and bought. And while they bought, the price went up. However, price did something. It left a week, right? It left a week. Now, this week, their price originally was, right? Now, when you understand this, it gives you an idea. Okay, this is where price was. This is where it is. And this is where it may likely be, right? Or this is where it may likely head to, right? The next candle we're talking about is the Tweezer Bottom. You see, this Tweezer Bottom is one candle that is really, really, it's a candle that depicts struggle. At some point, people fought. Now, this is not literal fight, right? It's a candle that tells you at some point, sellers were actively involved, pushing the market down. Then buyers came in and pushed the market up. However, buyers and sellers have equal strength, and they cannot move the market more than they already have. So price remains at a level of equilibrium. Price is kind of in between, not going forward, not coming down. It's just there, right? And such candle tells you, just take back. It tells you of a ranging market. Now, in our previous video where we talked about trends, we talked about ranging markets, and if you haven't seen that video, the link is below the description of this video, so just go check it out. Right now, I'll be showing you these candles in the chart, and then we'll be explaining how it is you can start trading using these candlesticks Now let's go. The question is, how do we trade using the candlesticks? Since we've talked about the history of candles, we've talked about the types of candles, the message or the information behind each candles, how do we trade using the candlesticks? Now, before you trade using the candlesticks, it's important you know how each candle forms, right? And look at this, a candlestick, and this is a bearish candlestick, right? Now, this is the open of the candle, and this is the high. This is the low of the candle, and this is the close. Now, what does this mean? It means that at one point in time, price opened right here. And when it did open right here, it went up. Went up, giving you the highest points in the day price could move to, and eventually fell. When it fell, it gave you the lowest points in price moved to, and then went back and closed around here. Now, what does this mean? I will draw a chart schematics and show you exactly what I'm trying to say so it becomes clear. Right, in a given day, price opens this way, right? It's consolidation and eventually went up, right? Which is giving you the previous high of the day, or the highest point price moved to for that day, before falling back down in its original direction, right? And giving you a low, then going back up to close, right? This is what it means, right? So open just like this guy, high just like this guy, the body just like this, low for the day just like this, and close just like this. It is very much simple, guys. Now, I've heard about people who trade the ICT concept. This is what they mean when they tell you they trade the power of 3. It's just how a candle formed in a given day, and the way this candle is formed in a given day is influenced by traders' behavior. Now, how do you trade the candlestick? First off, in trading a candlestick, you have to understand trend. You have to know where the trend is headed. Now look at this. You can observe that the trend is going down. So you want to go down with the trend, right? Now the next thing is that you want to know what structure says, right? Now we made a video on trend and also on structure. If you haven't seen the video, you'd go check it out in the description of this video. You get the link and go watch the video, right? You have to understand structure. Why do we talk about structure a lot? This is because a candle print structure. How do I mean? Let's say this is a daily candle, right? This is a daily candle. Now within this day, there are many hours. Let's say the 4 hours, 1 hour, 30 minutes inside this candle. Now those candles, those time frame, those time frame inside this candle forms what we call the structure. So let's say in a given day you came to the market to trade and you found out something like this. Because you understand structure, you just want to go with the flow and continue selling. By the way, for adventure, you showed up in the market one morning and you first saw something like this, a consolidation, right? And markets moved up. You should understand that this is what we call liquidation. Price has liquidated some orders right here and it's about to continue in its direction. So just go check out that video and you get more value from that also, right? So first off, you understand the bias, which is the trend. Secondly, you understand structure, right? You want to know what structure is saying when trading using the candlestick, right? And then you want to observe each candle, right? Because in observing these candles, you are very sure of what to expect, right? So look at this. This is very unique and beautiful. Look at this. This is a Grave Doji. This candle right here is a Grave Doji. Let me make this a bit visible. This candle right here is a Grave Doji. It tells you at some point in time, buyers were actively involved in the market, buying the whole market, buying price, and later on, sellers took control and sold, right? They sold, right? So this is what it means to trade the Forex candle. But man, it's not all, right? This is not all. Thirdly, you want to know what candlestick patterns means. Now, there are a lot of candlestick patterns out there and people are oftentimes confused on what they mean. But basically, I will tell you there are just 2 candlestick patterns that work. And aside from these 2, nothing else works, right? Nothing else works. And I'll be showing you this in the chat. First off, the first pattern I'll be showing you is the double top. The double top right here. This double top initiates reversal a lot, right? I remember when I first started trading the Forex market, I never paid attention to candlestick patterns, but as I grew older into the Forex trading game, I understood the importance of patterns, right? This is the double top, and then the next one is the head and shoulder. Head, first shoulder, head, and the second shoulder, head and shoulder. Once you see this in the market, best believe you're in for a reversal. You're in for a reversal. Now, these two patterns can be inverted. They can be upside down. So when you see it, it could be an inverse head and shoulder or an inverse double top. But when it is an inverse double top, for this guy, you call it a double bottom, right? So this is how it is you can start trading using the structure, using the trend, and using the candlestick patterns when trading candlesticks. Now let's go into the chart proper, and I'll show you an example of how this has played out and how you can also gain more insight on the whole stuff talking about so far. All right. So first off, I said whenever you want to trade the candlestick, you must first understand the trend, right? And we already said the trend is headed south, is going down. That's cool. Secondly, you want to pay attention to structure. Why? Because structure tells you, okay, what's going on for the day, what's going on, how do we do? And structure gives you an internal idea of what a big candle is doing. Take for instance, you're on a daily time frame and you're seeing a daily candle. Structure tells you, at this point in time, price is doing this in the lower time frame. So take for instance, in a given day, price open with consolidation, which is what we've talked about before. Consolidation, right? Consolidation, right? Before you know it, price went up right here, went up right here. Now it went up, took out some orders right here before falling back down, right? This stuff continues. You see this everywhere in the chart, right? Now, just like I've said, the first thing you want to do is to understand the trend, find out where the trend is headed. Secondly, know your structure, then know your patterns. Now, the next point is our patterns. Now, let's look for reversal patterns and where they've formed, right? Let's look for reversal patterns and where they've formed. Now, look at this around here. Before price fell right here, what do you notice? Let's go down to the 5-minute time frame so it becomes clear from there. The 5-minute time frame, what do you notice? You could see what we call the double top. And what did the price do? Price fell greatly, fell. So guys, this is exactly what it means to trade the candlesticks. Trust you got value in the video today, and if you haven't liked and subscribed yet, please do that right now. My name remains the FX. See you guys in the next one. Peace.